Good evening, everyone. Welcome to my program again, the Key to Diversification, episode 11. For those who has been joining me for the past few episodes, can you just comment yes? Then at least I know that you have been joining my program. So just a little bit of background on myself. My name is Mandy Chen, head of IQI International Sales. I have been involved in this international marketing for more than 7 years, and myself as an investor, I actually invested quite a few properties in different countries for my past few years. So this program is to design for those who's interested to explore in international properties, or they want to diversify their investment portfolio by hedging against the currency, and yet they do not know how to go about it. If you are fall under this category, can you just comment a concern so that I know that you are fall under this category? So come to this program, we'll be able to educate you how to invest wisely. So in this program, we will giving you a fundamental of the investment guidelines and criteria to invest abroad. Besides, we are actually provide some insights of the global real estate market updates and outlooks for you to understand a little bit better on the international markets. So at the end of this program, you'll be discovered that, in fact, invest in abroad is not that difficult because some of the countries, the investments policies are rather friendly towards foreigner, and there's only minimum entry cost. So for those who has been joining our program, thanks for joining in. And I hope this program, you will love it and you are benefit from that. So if you have been joining us for the past few days, can you just give me a comment? Yes, then at least I know that you've been listening to my program. So our program is actually started every day, 8 p.m. at night, Malaysia time, GMT +8. And we will feature live in FB. At our IQI International Sales page. Of course, we will actually put on this recording as well to the YouTube, so you can actually replay all our recording in our YouTube channel, IQI International Sales. So remember to mark your calendars. We'll be features a few more programs, okay? Probably another 4 more, okay? So in your calendar so that you will join us every night. In this program, I invited quite a number of panel speakers, and majority of them are qualified professional real estate specialists, and some of them are from our IQI Global team. They are investors as well, so they are able to share their experience and knowledge to invest abroad and guide you through your property diversifications. So today we have a very special guest all the way from Sydney, okay, Miss Mandy Chen, the head of New Zealand and Australia from JUWAI.com. So she will be able to share some of the experience and the investment criteria in Sydney market. I'm sure a lot of people are very familiar with Australia. Or if you have any kids that you intend to send them to Australia and further the study, can you just comment Australia? Then at least we know that you have this plan. So you should start planning right now rather than you do the last minute investment. All right, so without further delay, let us welcome Miss Mandy Chen. Mandy, hi.
Hello, Mandy. Hello, everyone. Thank you for joining the session today. It's my great honor to be here today to share everything about Sydney, about the current market, property market, and you know, what we experience when we are living locally from this country, from this city. Okay, before we start, let me introduce a bit more about myself and about JUWAI, what we do here. So JUWAI.com is the biggest property portal for Chinese and Asian buyers to find the most suitable international property assets and the property related services. So we've been in this market for over 8 years, and we are a market leader and initiator, pioneer for the proper tech industry in Asia. And my personal role is to build the bridge between the Australian local developers and property agencies, project marketers, and our consumers and investors in our Asian countries and the Asian community in across the world. And a bit more about myself. So apart from working with JUWAI in property industry, I also worked as an international tax advisor in China for 6 years. And I myself is a certified public accountant in China as well. So, okay, here we are. Let's start. And Mandy, please feel free to interrupt me at any time if you have questions, yes, or any comments. Okay, so here I am in Sydney. It's actually just 10 past 10 p.m. local time. Sydney is a very beautiful place and a very great city to live with. And it happens to be the largest city in Australia. And you can say that Sydney is the home to more than 1 in every 5 Australians. And interestingly, it's also the most culturally diversified city in Australia. And it's fair to say that every 2 of Sydney residents, they were actually born from overseas. Quite interesting.
Including yourself?
Yes, of course. I was born in China and living in Australia for already many, many years.
Why do you choose Sydney instead of other cities in Australia?
Well, it's a personal choice, and also I think Sydney is a good place to work, to establish your family, and to grow for your entire life, because the environment here for education, study, healthcare, and professional, it's all above a certain level. And it keeps improving. Okay, so here we are. We have over 5.2 million people in Sydney. Actually, it's already 65% of the total population in New South Wales. And yet the population is still growing over the years, around a 1.5 growth rate. And then interesting, the overseas migrants contribute to over 70% of the total increase in population. So you can say that immigrants from everywhere, every countries, with all different colors of the skins and talk all different languages, living in Sydney and find themselves to learn about the culture and learn to form one new culture, which we call it probably the Australian culture. Yes, and obviously Sydney and New South Wales is the most heavily populated city in entire Australia, which also gives a very vibrant growth in economy and drives entire economic growth in Australia. So Australia keeps GDP growth for over 20 years, which is kind of a good performer among developed economies. And last year, 2019, Australia actually achieved a total 2.2 GDP growth. I believe that outperform majority of European countries. And just by the Q4, the economy grew 0.5%, alongside with the household consumption growth 0.4%. And the unemployment rate by 2019 was the was the best performing in last 25 years. It was only 3.5%. However, we all know that in the quarter one of 2020, the COVID-19 just disrupted everything. So we can't see the whole picture of 2020 yet at this moment, but we hope for the best at this moment.
But how's the situations in Sydney right now? Is it completely knocked down, or you actually can start, you actually are working as usual?
That's a very good question. Obviously, Australia and Sydney, we are influenced by COVID-19 as much as the entire world. But after the Easter holiday, which was early April, we can say that the good news keeps coming in. The number of increased new cases keeps slowing down, and the total case, I think it's maintained around 6,700 in total in Australia for this moment. And the daily increase is slowed down to single digit. And the 6 states actually reported a 0 increased case for already quite a few consecutive days. And people can foresee the turning point for the whole situation at this moment. And the government also looks more optimistic at this moment. They are planning to relax the restrictions for people's life and the business activities. I believe in next few weeks, you can say people going back to beach to enjoy their leisure life, and shops will open, and people will go out, exercise, and enjoy the sunlight before winter comes. So it has some changes, to be fair, but it's not the worst situation, and it's certainly getting better.
Okay, for those who just joined us, who just come in and join us for this program. Today we are talking about Sydney market. So welcome to the Key to Diversification, episode 11, and we are talking about Sydney market right now. So for those who enjoy our program all this while has been joining us, can you just comment yes there? At least I know that you've been joining us for the previous program. Otherwise, you can always go to our YouTube channel to look for IQI International Sales, and all the recording has been uploaded there as well, so you won't miss any of the episode. So as usual in this program, we are actually giving out reports, okay, a free gift on regards to Sydney market, so which is actually contributed by Wendy. So if you like to have this report, so please comment report and like our page and like our program. My team will be actually contact you personally to send the reports to you. Remember, please like our page, like our program, and comment report. My team will actually contact you to send you the report. Okay, let's back to the questions. Okay, so what is the forecast which related to during this COVID-19? A lot of news was talking about property market is affected badly, and there'll be dropping of price and so forth and so on, and agents can't actually do the open house and inspection or whatsoever. So is such situations impact in Sydney as well?
So the government restricted certain property-related activities, but both the buying and the selling activities are still going on through new format. So, for example, people can still transact properties through online auctions, or they can still inspect properties through private appointment. So, well, it's no one can give a certain answer for exactly how the property market will go, especially in the short term. However, I believe we can always refer back to history, because the economy is something runs in a cycle and grows in certain patterns. And if you track back to the recent decades, even back to 1990s, we all know that the world has gone through several times of a severe economic crisis. No matter it's a financial system crisis, debt crisis, stock market crisis, Australia was relatively less impacted. And if you take a long-term perspective, you will find Australian properties in particular performed as always as stable, safe, and sustainably growing assets for the investors. So let's take an example for 2008 global financial crisis. So right before the global financial crisis, actually, the Reserve Bank of Australia raised the interest rate to a very high point, over 7% at that time, until the GFC hit the market in September 2008. And obviously the market came unprepared and went through a downturn in a short term. But then the central bank quickly reacted to it and lowered interest significantly to 3% by April 2009. And you can say that the property market immediately gave its feedback. And also the economy is slowly recovering from the impact from the GFC. So actually, by March 2009, the national median property price already reversed its falls to only 0.1% drop. And then the next quarter, the second quarter in 2009, the property market jumped by 3.5%. And the third quarter jumped by 3.9%. And the last quarter of 2009, it's 4.6% growth. So totally in 2009, it's actually over 10% growth in national median price. And that's just 1 year after the GFC. So I'm not saying that over this time, exactly the same growth rate will happen, but we just refer to what happened in the past. And we can always make a decision between, okay, whether I hold my cash to observe for a bit longer, or I just lock in some good assets at this moment, which I may get a good bargain. Yeah, and as Mandy, you just asked me how's the market is performing, how people are transacting. Actually, we see some quite good deals made in recently, no matter from commercial segment or residential segment. So for example, I think in last months, April or March, we see some restaurant in Sydney can sold through online auction at 4.6 million Australian dollars, and some not quite big, small coffee shops sold at 2.9 million. And I remember in April, petrol station in Manly, which is in the northern beach area, sold at 7.2 million Australian dollars. Yeah, and if you look at people's how active people performing at this time, you can probably see from the views on the local property portals, and then there's on average over millions of views maintained at each week. And in residential segment, one of the leading residential developer, Meriton, just announced at 24th of April that they managed to sell 175 units over the last 5 weeks' time. And then they actually launched a new project in mid-April.
Wow, that's amazing results.
Surprisingly, the market still holds strong, no matter from the volume or hit some single deals price. And also, if you look at the general price of the market, by end of March, the 5 capital cities still experienced a 2.7% growth in property price. And the Sydney residential market still experienced 70% auction clearance rate just the last week. And then if you look back a bit further, the Sydney market property price grew 13.9% in last year, in last 12 months, and Melbourne followed by 12.8%. Yeah, so we can say that the market is not much weakened, to be honest, at this moment, even though things could still happen, adjustment could still happen in next quarter also, but so far we haven't seen much yet at a micro level.
That is great. So how do you actually, because a lot of people when talk about Australia investments, they always compare a few cities like Australia, Melbourne, Brisbane, and Perth. So what is the competitions among these like 5 cities? So how do you view about this?
So, well, if I vote for one city, I would definitely vote for Sydney because I live here and I bought property here. But obviously, I believe other capital cities, they all have their own value proposition to attract different categories of investors. And actually, I think the long-term perspective for Australian property as a whole, they all lies in the economic growth potential and population growth potential of the whole country. And the good news is, I believe IMF predicted if the COVID reached the peak in next 3 months, and if the Australian government really relaxes the social distancing in next 3 months, an Australian economy will emerge with a V-shaped recovery instead of a U-shape. It's a V-shaped recovery. And I believe that all the states, like you mentioned, no matter in New South Wales, Victoria, probably these 2 states acts more aggressively at this moment, at least from what you can say from the media, to support the property industry and the construction industry, because the general public believe that the construction and the property industry will contribute significantly for revitalizing the whole economy. So I can cite some data for everyone. Probably it gives you a clue what's the government doing and what the business are doing. So Victoria just approved 4.5 billion property development plan recently. And New South Wales kickstarts economy plan with a 7.5 billion project list. And there's just the 2.5 billion budget approved for Central Station renovation plan, which is a junction station in Sydney. So it's a very significant infrastructure project, and that will generate lots and lots of jobs and economic growth opportunities. And some developers also take this opportunity to buy land. So for example, one of the leading land developer, Stockland, they just announced a 415 million land purchase in Victoria, Box Hill, where they will build 1,900 homes. And also, even New South Wales government, they announced that they may buy spare housing, spending 500 million as a stimulus plan. And also the New South Wales government is trying to use the public fund to help the business. For example, they plan to spend over 70 million over $70 million dollars to speed up some of the development projects, which is already at the kickoff stage. So if you sum up all these influence together, the fundamental assumption is after this coronavirus issue, there will be a bit undersupply of the residential or even commercial properties. So I think data shows that New South Wales will experience the lowest number of new homes being built ever since 1953.
Yep, that's good. So in JUWAI.com, there is a market survey. So it's talking about where Chinese people are actually preferred to invest. And in fact, Australia is actually one of the top 5 countries that are looking into it as well. And as to compare to the median price, a lot of people are saying that Sydney is the highest amongst the rest of the cities in Melbourne, Brisbane and Sydney. What is your view on this?
Yeah, that's a very good question. Again, I think a lot of property purchasers from our JUWAI side, they are not only investors, but only purchase property for own use, or they might be lifestyle seekers. So a lot of the decisions are made not only for financial reasons, but also for other personal perspective. But if you look at purely the financial return, I believe, again, the fundamental logic for buying a property is a long-term capital growth, especially in Australian context, which there's a negative gearing regime applies. So this regime, the underlying assumption is you look forward to a long-term capital growth, then you will benefit from the negative gearing regime, and not just a short-term rental yield, but you get benefit more from the long-term capital growth. That's why if you predict which city will be the city, or which state will be the state, that you can forecast the biggest growth in population, in economy, in job opportunities, in infrastructure, then this should be the city you consider investment.
All right, great. For those that were just joining us, welcome to my program, The Key to Diversification, episode 11. So today we are talking about Sydney, Australia. All right, so as usual, we are giving the free reports away for those who actually join us in this program. So please like our page and our program and comment report. We will get our team to contact you to send you the report. For those who have any question with regards to Sydney markets, so you can actually post your questions. We will try to answer it towards the later part of the program. So please feel free to drop your questions. We will answer it accordingly later. All right. So what is the investment policies and requirements for foreigner investor if they are looking into like Australia as a whole or in Sydney particulars?
So again, that's a very good question. So Australian property market is generally a friendly market for foreign investors. So you can say that if you talk to the developers and talk to the agency, a lot of them have the in-house team with Asian background, and they also take efforts to open up their branding and their presence in major Asian countries over the past years. So Australian and Australian is applies a quite high standard for property related compliance. So as a foreign investor, the first thing before you consider investing in Australia is probably understand the process of purchasing the property in Australia, and which are the professional parties you must involve in your transaction. So you probably don't count on everything DIY, because that's a compliance requirement that you need to hire the professionals to help you until you get settlement. And for example, you need to work with the legal advisors at the very beginning to review contract for you, and until at the settlement for you. And once you are familiar with the process, and you have some targeted properties, and then you probably need to consider the FIRB approval. So FIRB refers to Foreign Investment Review Board. That's a government institute that approves foreign investment. So recently, actually, FIRB announced a new policy. They reduced the review threshold to 0, which means all the foreign investment in Australian assets need to pass FIRB review. So a lot of investors ask, what does it mean to the foreign property investors, especially when I just want to invest in one residential property? What does it mean to me? Is it going to be more difficult? So from the interpretation from the major media or research institute, people don't generally think FIRB, the new FIRB policy, is pointing to the normal property purchasers. Instead, they probably more looking to review or approve some of the business or some of the funds from the foreign countries, because you can say that in the news, you can say news like some Singapore companies paid 40 million to buy a hotel in Australia, or some Japanese group paid 7.2 million to buy some office. But these are usually quite big deal size. It's a much more material investment as compared to our, apartment or housing investment. But yes, you do need to pass FIRB approval before you can actually buy this, purchase this property. And then probably the next step is you need to consider a financing option. Unless you want to pay everything by cash, which is also an option, because now the currency is in favor of our Asian side. Yes. So, which is a good thing. And talking about financing, so in Australia, generally there are bank institute and non-banking institute and the seller financing, the 3 major types of financing. And the banks, probably it's relatively hard for foreign investors who don't have any Australian source revenue to prove to the bank, the big 4 banks. But it is okay. There are so many non-banking institutes providing financing to the foreign investors. And some of the sellers, for example, developers, they may have their own financing company as well to support their clients. So the current market rate is ranging from 4% to 7%, depending on the lender themselves, the products, or the case-by-case study of the loan applicant. And then they can provide from 75% to even 90% loan. That means sometimes if you buy a 1 million Australian dollar property, you just need to pay 10% at the initial settlement.
But is that only applicable to locals? Because foreigner, you can't actually get up to such a high margins of the finance?
Actually, it applies to both local and international loan applicant. When I talk about the up to 90% LVR from some of the lenders, which is quite, which is quite supportive to our investment activities. Yeah, and then after you have some financing facility ready, and then the next step you need to think about is probably the transaction cost, which is mainly tax. So in Australia, you need to consider a stamp duty for around 12% in Sydney, I believe. And then the 4% will apply to everyone, including the locals. And the 8% will be additional to the foreign investors. But interesting, I think from yesterday, there are news in the media that the government is considering doing some tax reform and
Wow.
including stamp duty. I don't know what they will do. We will keep monitoring. But if that cost is reduced or even removed, that will be a very big plus for our investment return, because you saved. I don't know if it's 12%, but you definitely will save something. And apart from stamp duty, another tax you need to consider is a land tax surcharge, which only applies to the ownership of land title by foreigners. So if you buy an apartment, you don't need to worry about land tax surcharge. And another one is a GST, 10%. But again, don't worry, because GST is already included in most of the price from the developers or agents. And the last but not least is the capital gain tax. Even though we usually encourage the investors for Australian properties to take a long-term perspective, but if you, for certain reason, you need to exit in the short term, you may be subject to capital gain tax, which is at the corporate tax rate at 30%. It is very important because Australian tax regime on the capital gain part is pretty much the same with UK and the US. So when they review a certain proceed from disposal of assets, they would look if the investment for this asset is for capital purpose or revenue purpose. Only when they deem it's for a revenue purpose, they will charge this capital gain tax. And if the transaction is deemed as a capital purpose, and then it's free from capital gain tax. So this regime actually also supports long-term capital investments instead of short-term investment.
And I'm in Australia, that's lots of expenses related to property is actually tax deductible as well. So at the end, you do not actually pay that much of the taxes as well. So normally the tax consultants or the accountants will actually advise the clients accordingly with regards to this tax as well.
Yes, definitely. You rely on the professionals, they are experienced and they are professional. So they will advise you your whole tax position in Australia. And I believe they will advise you to fully utilize this negative gearing. So if you are a non-resident for tax purpose in Australia and you generate income, for example, from rental or other business from Australia, but meanwhile, as Mandy introduced, you have some property-related expense, no matter it's property depreciation or it's other expenses, and these can all be deducted from your tax payable. And if you have unutilized loss, and you can even carry it forward to next years.
Yep, that's great. A lot of good information provided by Wendy. All right, so for those that were actually keen to actually explore in Australian market, in fact, this is probably the best time to buy, because in terms of the currency, it's actually relatively low as to compare. The highest we probably hit about 3.2 to about 3.4 against ringgit. Okay, if you're talking about now, it's about 2.7, so it's still considered very low. And for those that are interested to look at the projects that we have in Sydney as well, please log in to www.IQIglobal.com, our website, to search for some of the projects in Sydney. In fact, we have quite a number of projects in Sydney which offer very attractive package and price, and in good locations as well. And developer can actually offer up to 90% financing for 3 years. So therefore, this is actually very, very attractive. Okay. So we will actually open the questions to the floor. If you have any questions, you can actually put your question down. Otherwise, we will actually answer it accordingly. So for those who has been joining our program, thanks for joining us, and hope that you will benefit from this program and you will like our program. And remember to log in every day, 8 p.m. Malaysia time, GMT +8. We have more programs, at least another 3 or 4. We talk about educate you guys how to invest wisely. So tomorrow we have the topics again. Is on Australia, but this round will be on the Brisbane. So after you know about Perth, you know about Sydney, so the next city you can actually look into it will be Brisbane. All right, so there is actually questions. Okay, let me read out. How do you see the current rising tensions between China and Australia, where Chinese government is looking to boycott Australia over COVID-19's inquiry? China being a significant trading partner to Australia, will China stop all the trades, tourism, and discourage its citizens pursuing further education in Australia? What is your view on this?
Okay, so I will never know how both sides, or how the government will manage the situation. But I believe in Australia, people generally believe that there's always some voice for political purpose and some real needs for economic purpose. So as the question mentioned, that China and Australia mutually they are very important trading partners to each other. That means in a global globalized economy, and then in a very close regional market, they shouldn't be able to leave one from the other. So I believe both countries will make a reasonable decision that benefit the general public, benefit the students, benefit the business for the long term relationship.
Of course, we are talking about China is the biggest investor when it comes to Australia, but then don't neglect that some of the countries like India and some of the Asian countries are going strong as well. So they are actually investing in Australia as well. So not just China as well, right? Okay.
Yes.
Any more questions? Is interest only mortgage loan available to non-residents?
So the mortgage will be available to both locals and the non-residents, subject to different products.
Package, yes.
Yeah, different package, yes, and different applications.
Okay. So last but not least, just want to, as a personal experience, and this is just a personal question, as to compare in China and Australia, which country do you like the most? Or you prefer?
I like both countries because they are at a different stage. Australia is a developed country here, so you can feel people here are more relaxed. Their focus is to enjoy life. So you can say that people enjoy the sunlight, people exercise, running in the street, going surfing every week, if not every day, and sit at a coffee shop for a few hours, which you probably hard to see in China because people are busy. People are still trying to develop their personal fortune. So I would say you probably need both, right? And at a different stage of life.
All right. So I think because of the timing, we will pick up the last questions. The question was saying that the 90% LVR loan is from which financial institution?
It's actually not from a financial institute. It's from a developer, an Australian developer. And I believe IQI is also working closely with this developer. So you probably will be able to get more information from IQI's website. So it's very close to you. This very good opportunity.
All right. So thank you, Wendy, for sharing your experience with us today. And thanks for coming to my program. And of course, for those who has been joining my program, thank you for your support. And I hope you will continue support for tomorrow. Tomorrow, we are talking about Brisbane. Okay, for those who are interested to explore Brisbane, you can actually join us tomorrow. So for parents who plan to send their children to Australia, perhaps this is probably the best time for you to actually look into some of the options rather than to invest on the last minutes, because right now we definitely have lots of good deals that is offering to the investor. All right, so thank you very much, and I hope everybody enjoy this program and you benefit from it. So if you like our program, please send us like our page as well, and you can actually comment the report. Remember, we are giving out the report, the free report to you, so please comment report. I will get my team to send it to you. So meanwhile, thanks a lot. Good night, everybody. Stay strong and stay safe. Bye-bye.
Thank you, everyone. Thank you, Mandy. Good night, everyone.
Good night. Bye-bye.
Bye-bye.